Hey guys, Akil Stokes here. Welcome back to another Weekend Trading Edge video coming to you early this week, so it's not quite the weekend, but I do that because I love you guys, and if you love me back, show me that love by hitting that like button. I've got a lot of cool opportunities to share with you today, but as always, I want to give you a heads up of the top fundamental event on my radar for the week ahead, and that is going to be Thursday's ECB monetary policy statement, so interest rate decision. Now, there is no interest rate change expected to be had by the ECB, but that may not be the case come September, and what the market will be keeping a close ear out for, if that's the right way to say it, are any murmurs or hints or clues of what the ECB is going to do, potentially start cutting in September. So the 8:15 rate statement isn't going to be that important, but pay close attention to the 8:45 press conference that comes afterwards. Speaking of interest rate decisions, the US has their big interest rate decision coming up at the end of the month, July 30th, so next week. And I'll be doing something really cool. I'll be involving myself in a live trading battle that you can check out. I'll put a link in the description box below, but I would love to have you join, and that way you can cheer me if I do great and boo me if I crap the bed. Either way, it should be fun and entertaining, and I'd love for you guys to show up and support. So let's hop into the charts. Don't mind the moving averages. They're going to be important for later when I show you a cool daily chore opportunity that is kind of already happened, but still available to trade. But let's start here on Euro New Zealand 4-hour. And yes, we're starting with the Euro New Zealand because thanks to the Trump-Powell feud, many of the charts look like complete junk. There's nasty wicks that we don't really need to mess with right now. So trying to find something that actually provides a nice opportunity. And the opportunity that we have here is going to come in the form of a potential bullish Cypher pattern. So I'm going to shortcut this for you. I've shown you Cypher pattern many times in the past, and I've probably put up a little editing note picture of it, explaining what it looks like. But what we're looking at for our Cypher pattern is a move, and this will make it easier, that looks like this: a swing low to swing high being our X to A, our retracement right here being our A to B, an extension right up to the highs here being our B to C, and then if price action were to come back to our 786 Fibonacci retracement, that would be the completion point for our bullish Cypher, with that completion zone going from the 786 to the bottom of that X leg. This is an advanced pattern formation. Basically, if you guys are new, these are multiple leg patterns using Fibonacci's that end up with high probability trading opportunities. They've been a staple of my trading since I first started. They're not sexy. They're not going to get you massively big profits on any individual trade, but they are very frequent. They're very consistent in the market, and they're a nice little steady Freddy that I have running in the background as I shoot for other big moves with different strategies. Next, we're going to jump over to gold. I just showed you a bullish pattern. Now we're going to look at a bearish pattern. This is going to be called a bat pattern. So it's another harmonic pattern. It's another pattern that uses Fibonacci's, but this one is a little bit different because it does give us a little deeper of an entry. So with the bat pattern here, what we're looking for is that same starting point, swing high to swing low, and X to A. Our retracement right here is our A to B. You can see it comes past the 50% retracement, but it does not hit the 618. If it were to hit the 618, we would be on alert for a different pattern formation called a Gartley. We then have a B to C move right here. So this is a failed extension back to the downside. And once again, if price action were to complete, this time at the 886, so a little bit higher than that 786 that the Cypher was at, this would give us a completed bearish bat pattern. Now, what I love about these patterns and the deep completion is that if I were to just draw this line or this box out a little bit lefter, you would see that, boom, it comes into previous levels of structure. So you'll often find that you have a lot of structural support if you're into that type of thing with these advanced pattern formations. Now, the one thing to be aware of is this. So I'll give you the good and the bad. The good is that we are at the highs of gold. So I would expect some type of reaction. Again, with these patterns, we're not expecting a big move all the way like that, right? That was a mistake we spoke about in last week's video where a trader kind of looked for too much of the move and it was a winning move, but they missed it because they're getting too greedy. We're just looking for a short little pullback, something like that. And I wouldn't be surprised to see that as we test all-time highs, because there is going to be a lot of selling pressure from people saying, oh, we're at all-time highs, this is a perfect place to sell, as well as some profit taking from buyers saying, hey, let me get a little bit of my profit off the table because I don't know how the market's going to react to these all-time highs. So this is a perfect place to have a pattern formation, if I didn't just jinx it by saying that. But one thing to be aware of, one little thing that you should be massively aware of, is this wick over here. It's a little thing. It's only a single candle, but the high of this wick represents a rejection zone. So what that means, right, the wick is the full range of the candle. So the high of this wick right here means that at one point during this candle, price was pushed all the way up to this level. It was eventually rejected, and we kind of held a more steady level of resistance right here, but it did prove that the market could at least test that level. Now, keep that in mind when you're placing your stop loss. If we're going to use let's say a 113 stop loss for this bat pattern, that's going to give us a stop loss placement right here. This is safe in terms of being above our X leg, which is good, but it's not quite out of the danger zone. So this is going to leave you as a trader with an interesting conundrum, and you should have rules for this. If you don't have rules for this is the perfect time to start considering some rules for this. What do you do with this trade? 3 options. 1, you don't care about the stinking wick. The trade is a trade. Who cares about looking left? I'm putting my stop loss right there because that's where the stop loss belongs. Boom. 1. 2, I'm going to take this level into account and raise my stop loss a little bit above that. So I guess if going back to 1, the negative of 1 is that you're not in the safest place, and price can wick up there, take you out, and then return to give you profits, which aren't technically profits because you're no longer in the trade. I've been there, done that. Step 2, you have safety because your stop loss is above that wick. However, now your risk reward is all types of screwed up, right? If we just draw out a risk reward for both of these scenarios, we'll do the first one right here. So this is scenario using normal stop loss. Ooh, that looks good. Look at that, 1.5 to 1. But if we adjust our stop loss, nothing changes with our targets. And now we have a stop loss that is up here, which is a little bit less than 1 to 1. So if you are a trader that requires at least a 1 to 1 risk reward or more, it may put you below your minimum. Now, I know some of you guys are shouting at the computer. Sorry about that. I got kids and neighbor kids all running around, so it's very, very loud. I'm going to yell at them, and I'm going to make it live so you guys can hear it. But where was I at? So I know you guys are screaming at your computer, similar to how I just screamed to those kids, right? What if I just increase my potential target to give me the risk reward that I require? Well, the problem with adjusting targets is this. Our targets are in a very specific place for a very specific reason. They are at a location in which we think price action is likely to go. If we didn't think price was likely to go there, why would we put targets there, right? It's kind of common sense. In adjusting our targets, if you've adjusted it to fit your risk reward, which is good, but you've adjusted it to a place that you don't actually believe price is likely to go to, then how are you ever going to capitalize off the trade, right? It's very similar to me betting on a team. Let's say Everton, because you guys love making fun of me for being an Everton supporter. Let's say Everton is playing Barcelona, and I do not think Everton is going to win. However, I'm going to place a massive bet on Everton to win. It doesn't really make sense. So you want to be careful with doing this. And if it does fit within your analysis, meaning that you do think price can go lower, you probably should be shooting there in the first place for targets. But this is kind of the cons or the dangers of doing something like this. The last point is going to be this. If you are dead set on adjusting your stop loss, you want it at that level above structure for your safety. But you also don't want to move your targets because that would be silly to shoot for a target location that you don't think price is going to go to. The last thing I would say to do is adjust your entry. So perhaps instead of entering right here at the 886, you put an entry right here, maybe halfway between that 886 and the highs. And then I'll do another one, right? Then that allows you to have a little bit better of a risk reward. That actually the reward would be adjusted a little bit. So let me do that real quick. But it puts you in a position where maybe you can get a good risk reward. Again, I'd have to adjust this down there. Maybe you can make it work like that. Now, again, the negative of that is that if price action reverses on a dime right at the 886, then you're just not in the trade. So understand that this is something that we talk about this with our traders a lot on the platform, but it's understanding that there's a pro and a con, there's a give and a take to everything. There is no best way. So if you were currently typing in the comments section below, Akil, which is the best way, to answer it is there's none. There's only the best way for you. So it's important that we have this discussion, knowing the pros and the cons, and that way you can find the best scenario for your personal situation. So there we go. Look at that. Nice little bat pattern on gold. Never thought this would turn into a lesson, but haha, there it goes. If you liked it, hit that like button because I'm supposed to tell you that in the middle of the video, right? So next up is silver, and this is where things are going to get a little bit interesting. I don't really talk about this on the YouTube channel because I don't really feel like explaining it too much. It's a strategy, however, that we just got a very nice compliment off of called the Daily Chore. Let me read it to you. Thank you guys. I'm as green as it gets with this. Plumber by trade turned business owner, been running a plumbing company for 15 years now, started all of this with your first video for dummies. I'm about 30 days in, have a strike rate of 76% overall as of today, simply using the Daily Chore strategy, and man, it sure does work. Still got lots to learn, but well on my way, hoping to replace my business income with trading someday. I hope I can get a chance to shake your hand and thank you in person. So that just came through the emails, and I was about to record a video, so I said, hey, let's find a Daily Chore example to look at so you guys can see what this trader is referring to. And here's our example of the Daily Chore. So the Daily Chore is a strategy, trying to make this as short and simple as possible. It is a pullback strategy specifically for the daily time frame. Now, when I say specifically for the daily time frame, that is how it's taught. But of course, I would encourage you to try it and test it on different time frames because you never know. But the original idea was to give something for traders who have a very busy lifestyle. They can't day trade. They can't check the charts intraday because they're going to get fired and get in trouble with their boss. But they want something that they can still trade that requires minimum attention. So something that where you can come in for 5-10 minutes at the end of the day, look at the charts, signal, no signal, orders, no orders, and then go on with your day. And this is perfect for that. So what we're looking for is a pullback into our moving averages, sorry, voice cracking, and a rejection candle. And that's what we get right here. Again, I won't bore you with the specifics, but you can see this candle right here pulled back into our moving average. This is an 8 EMA, this white one right here. We got rejected and we closed in the upper 50% of the candle. And that is pretty much the gist. Again, there's other specifics to it, but pretty much the gist of what we're looking for in this Daily Chore signal. Now, this signal is a day old, so this would have been something that would have been triggered today, and by today I mean Friday, but price action really hasn't moved much, so we're still in that area where it's a valid buying signal if you're allowed to do it. But pretty much what you're looking for is this. You're putting a buy stop order right above the highs. Your stop loss goes right below the lows, at least in the traditional sense. And what you're looking for is a 1-to-1 risk reward. Again, this is just in the generic version of it. So if I take a look at my risk reward profile, I know that my stop loss is going to be right here. A 1-to-1 would give me a target right up here. So you can see there's still plenty of room to roam here on silver for this Daily Chore. Now, it's important to understand that the Daily Chore is going to be a strategy that is independent of anything else, right? Your normal analysis. So if you remember the last pair we looked at, we talked about the rejection candle. So for me as a counter trend trader, I'm looking at this whole zone as a rejection zone. So I would not personally be looking to buy in this area. But again, that is my counter trend brain working. For a continuation trader, you're saying, just like we looked at before, Well, price was able to push up to these highs before, which means there is a possibility that we can push up to those highs again. And in this specific scenario, we actually don't need to go all the way to the highs. We just have to go to about 38.80s, I should say, and that will give me the profit that I need. So again, it's important to not blend different forms of analysis, and that is very difficult to do, especially if you have a lot of things going on in your mind. That's how you get the paralysis by analysis. I believe we just did a Trading Coach podcast episode on that. But understand, if you're trading the daily chore, it is an individual, independent strategy that you should trade or look to trade on its own right and not introduce any other type of alternative analysis to it. By the way, that podcast episode I just spoke about, it was released last week, episode 1187, How to Focus on What's Important in Trading and Avoid the Dreaded Analysis Paralysis and Information Overload. So check that out if you have time this weekend. Next up is the DAX, and this is going to be an opportunity that I shared with you in a previous video. So real quick, let's see if you can identify what type of strategy or setup you think I'm going to name. I will wait just a few seconds, but you can hit that pause button and take as much time as you need. Dun, 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 dun. If you said 2618, you are correct. So if you remember the 2618 strategy, the 2618 stands for 2, which stands, or the 2 in the 2618 stands for the double top or double bottom. The 618 stands for a retest of the 618 Fibonacci retracement. It's funny, a couple of years ago, right, I saw a video by one of the S&B Capital traders, and they were talking about this awesome pattern formation that they trade, and they called it the Space Invader. And as soon as you said Space Invader, I got nostalgic. It took me back into the day where I used to play Space Invaders. I was like, let's check this video out. And lo and behold, it was a setup that was eerily similar to the 2618. Now, I'm not saying that to say that S&P copied us or anything like that. I don't think that. I'm saying that because now that I have heard that, or ever since I have heard that, I can't unsee it, and all I see is Space Invader creature every time I look at this chart. You guys see it? No? Anybody? Is it just me? Okay, you're weird, not me. Anyway, 2618, here's what we're looking for. Again, first things first, we are looking for a double bottom. Bottom 1, boom. Bottom 2, bang. Step 2, we are looking for a violation of the peak of this double bottom. Boom, mission complete. Step 3, we are taking a Fibonacci retracement from this lowest low here to the highest high here. And we are looking for a move anywhere from our 618 down to the low of our structure level. Now, if you're aggressive, you're putting a limit order right on that 618, and you're saying, as soon as price action hits it, I'm getting long. I don't need no stinking confirmation there. If you are more conservative, scaredy cat, just kidding. What you're looking for is, if price action hits that zone, reaches that zone, then you're looking for your specific reason for entry. That could be a smaller double bottom in its own right on a lower time frame. It could be a pin bar, it could be a 3-bar reversal, whatever is your cup of tea. But that's what you're looking for. Now, as far as targets go with this, 2 levels, and again, this depends on your conservativeness or aggressiveness, but I'll give you 2 levels to focus on. One would be a retest of the highs right here, so a move from here or lower back up to retest structure. A second would be a previous structure high test right here. Now, we would look for that to line up with 1 or 2 things. We can draw one out, right? One would be our Fibonacci extension tool. The Fibonacci extension is a tool that allows us to predict where price may extend to based on our magic Fibonacci ratios. You can see a 127.2 Fibonacci extension level right at the highs, right above the highs. So that's good confluence right there. Another thing we would use is an AB equals CD pattern, which would be an equal measured move. So copy the length of the move from the low to the high, and then drag it on. We don't have a place to drag it on yet, but you would drag it on to wherever that retracement came to. So right now it would be here. If it retraces lower, it would be there. That's something they have to do a little bit later, but that would be a good way to get confluence as well. Now, with that being said, if we zoom out on the DAX, you're going to see that we're at all-time highs, right? So, as I mentioned earlier, right, with the pattern formation and looking for confluence, if you're someone, and this is an index, and I tend to do this with indexes more than, or indices more than individual currency pairs, because indices tend to trend in a natural direction more than the Forex market, which tends to consolidate. If you're looking to take advantage of this move, maybe you do some type of combination where you take a partial position off right here, ka-ching. Maybe you take another partial off here, ka-ching, ka-ching. And maybe you hold on to one. I don't know what I would use to hold on. The money face. There we go. You hold on for one and potentially ride it higher if you believe that this thing is going to continue up. So a cool 2618 opportunity and different ways for you to trade it. Do me a favor, type in the comment section below, what would be your way of trading this? Would you look to get in, get out at the highs, or would you leave a little bit on to get a taste of a potential continuation? I'd love to see the different views that you guys have. Speaking of views, if you haven't viewed this already, you need to check it out. I've been promoting it for a little bit now, but there is a free computer buyers or builders guide that I have for you. I say buyer or builder because, well, if you're someone that knows how to build computers, it's a perfect reference guide to see, hey, what do I need inside my system so I can go buy the parts and build it myself? Or if you're someone like me who knows nothing about computers, I learned what needs to be in a trading computer, and then I paid someone to actually make the computer for me. So I've used them twice to build my personal machines. Each time I've gone through the guide and tried to figure out what was what and become a little bit more educated myself, but I certainly recommend it. It's free, so why not? So just scan the QR code in front of you. I'll put a link in the description box below, but it's a really cool resource, something that I come back to on a regular basis because I'm computer illiterate, but I promise I'm trying to learn. All right, so following up on our trend continuation trade, we're looking at the Australian S&P right here, another index that is bullish. Surprise, surprise, right? Let's talk about if you want to get involved in this bullish move, where might be a place to do so. Now, the initial level that stands out is going to be right here, this previous high of consolidation. Pretty flippin' obvious, right? But if we go down to the 4 hour, we have a few other levels that stand out as well, especially if you want to be more aggressive. So I'll give you 3 levels to pay attention to. One is going to be right here, right? See this big green candle? I call that an elephant candle. What I like to look for is the consolidation zone before that elephant candle. So imagine it being like a high and tight flag breakout on a lower time frame. So that's section 1. Again, looking for a pullback into that area, looking for your reason for entry, and then buying it there. Section 2 would be a similar level right below it. That white line was, remember, the highs of this level that we spoke about on the daily. And then section 3 would go all the way from the high of this wick to the lows right here. So if you're looking to catch a trend, actually, I probably want to make that a little bit lower. Yeah, let's go right there. I still like this level, but just be careful of this pink line as far as like stop losses and stuff go. But 3 levels if you're looking to hop on this trend via the pullback. Lastly, we're going to head to oil, and I'm going to try to leave my fundamental views out of this, but fundamentally speaking, oil's in a really, really weird situation with everything that's going on in the world. But, and I'm not necessarily bullish oil from a fundamental perspective right now. It's kind of TBT, to be determined. But from a technical perspective, here is what I'm looking for. If price action can clear this shelf, right? And this is a nice little structure swap zone where you can see price action came down previously, found some support, bounced up, came down, we hovered there again, and then finally broke to the downside. If price action can break this level, violate this level, excuse me, I would expect a continuation back across this channel up into the highs. If we go down to an hourly chart, we also have a classic reversal pattern setting up in the form of a head and shoulders pattern. So a brief explanation of a head and shoulders pattern, because we haven't done it in a while here on the YouTube channel. But what we're looking for, this would be considered a complex. I want to call it a complex reversal pattern. Yeah, I want to call it complex, not because it's super hard and difficult and only people as smart as me can understand it, but rather because it just has multiple legs. So you think of like a V reversal like this being a simple reversal pattern, a double bottom like we showed you earlier being like a multiple reversal pattern. I don't know. This would be a complex reversal pattern because it has more legs. Probably could have just left all that out, but that's Akil, right? Anyway, clear and obvious downward move here. We get consolidation, which is going to end up being our left shoulder, right? I'm actually going to use kind of this area, right? I'm going to draw that again. I want to take those highs into account. Consolidation being our left shoulder right here. An extension down, but a very small extension down, right? You can see the length of this extension is much smaller than the length of this initial move. That's going to be our head. A move back up to our consolidation level over here, sorry for your eyes with that, is going to be the connecting part of our neckline. And then what we're currently putting in right now, maybe, potentially, is our right shoulder. Now, what we would expect, but it doesn't have to happen, but what we would expect of our right shoulder is a symmetrical move to the left shoulder. Again, this doesn't have to happen. It could be a valid head and shoulders if it's not symmetrical, but many of the best moves in the market do have symmetry to it. So we would be looking for this right shoulder to probably complete somewhere in this area. Now, the part that's important, which I shared with you earlier, is waiting for this neckline to be violated. Now, there's two ways you can do it. You could either connect the dots, right? High to high, this little dotted thing right there, and wait for that level to be violated. Or if you're using just horizontal support and resistance like me, I want to see this solid line violated. And if we can do that, then again, the expectation is that we will continue higher up to where I showed you before. Now, before you go, make sure you hit that like button. If you have any questions, please leave them below in the comment section, or if you just want to share your idea, or if you have a request for maybe a pair or something that you want me to take a look at, you can do all that in the comment section below. Also, since I've been shamelessly promoting a lot today, head over to www.tier1trading.com if you're interested in learning how to trade. We do work with traders of all levels, especially newer traders who are just getting started, so there's no need to be shy. But if you are shy, make sure you check out that 14-day risk-free trial membership first. That gives you 2 weeks on the platform. You can join the live sessions, you can take some courses, you can interact with the community, talk to the coaches, and just make sure it's the right place for you before you make any type of financial commitment. And there's no auto bill or anything like that. You just lose access after 14 days. So until next time, plan your trade, trade your plan. I hope you guys have a great weekend. Hope you have a great week in the markets, and I will see you when I see you.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name. All our insecurities are on display.